Good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to the Aftermarket Mondays webinar for the Active Trend Trading service. It is now 10 after the hour, and we're getting ready to go. I am calling in online from downtown, well, not downtown, but Boise, Idaho. We're in the San Francisco Bay Area, San Jose on last Thursday, Friday, and then Saturday we did the Bay Area Moneymakers meeting, and then flew out Saturday to get over here to Boise, where my youngest son, his wife, and our two grandchildren have moved to. And so we're enjoying our first introduction to Boise. They actually live outside in Boise in a place called Meridian, which you may know where that's at if you're up from this area. All I know is it is awful strange, not awful strange, but it's different. It seems so late in the stinking day, and here we are, the market just closed, and I'm sitting there going, oh my gosh. So my hat's off to everybody who trades in some of the earlier time zones. There's benefits to all of them, but let's get going here. I want to remind everybody that all materials we present are for trading purposes, and only traders should always pay per trade any new method prior to the risk of their own personal capital. Now, what's the objectives of the Active Market Monday? One is to give some timely, actionable intel at the beginning of each week. Do a quick market review. Right now, what we're seeing is basically we're seeing the market moving between its past highs and a low, but it's just kind of like brackets, kind of like I called it last night in the Art and Science of Active Trend Trading, is it's ping-ponging. And so we have to be ready towards the bottom of the range to potentially buy in, because it's moving a lot, but just not trending a lot. So that's what we're looking at. So we'll be looking at stocks are setting up, and then here's some of the refinements we've made in 2018. One of the good things I think you will appreciate when after I do this stay with Brandon up here in Boise, is he's going to be working a lot more with me with the Active Trend Trading system, and he's going to be working on just some of the training programs and all that kind of stuff, and so to make it more efficient and effective. So, okay, here's what we're sitting as of about 15 minutes afternoon, after 12 on Pacific time. Everything was up. Forgot to change that to a green here on the Russell, but everything's up for the year, even if it's just slightly for the Dow and the Russell. We'll see if it maintains that, because what we were seeing with, and we'll look at each one of the indexes. So strategy 1, strategy 2 during September. Okay, that's what we did last year. I need to modify that. We'll get that changed over here shortly. But for this week, we're going to focus on the ETFs, the spiders, the Qs, the IWM, gold, oil, biotechs, and financials, core stocks that we look at, and then the bonus trade. I'm going to talk specifically about the bonus trade today, about how to time it, because it's like in between where we want to buy either one of these. And so you don't know which way to go. Then we'll spend a little time looking at the YY trade. It had earnings after market close today. If you're in this trade, we'll see how it turns out. This is a speculative trade, but we're after trying to put ourselves in a position to be able to benefit about a 50% gain, or if it gets up to 100% gain, that's wonderful too. So here's some of the things that we have bought and and taken advantage of. We had originally bought the straddle back on about 3 weeks ago. This is the May 18th, 130 straddle, 270.60 is what we paid for it. It actually fell down to about 26.15 or a little bit below, but our time loss was about $145. We offset that by basically selling premium against it, and today we picked up another $1.85, and this is expecting the implied volatility crunch, because the implied volatility on YY had gotten up to close to 100, which is about 40 to 50 percentage points above what it normally is. And so when the after earnings report, what you'll see tomorrow morning, after about the first 20 minutes to a half hour of trading, the volatility, implied volatility for this week's options will shrink back down to where they were in the past, and that's called an implied volatility crunch. So before we get on to that particular entity, I want to take a real quick look here at gold. Again, I think that gold and learning how to trade the junior gold miners is one of the, if you have a, if you lack time to be able to follow a lot of different entities, this is a make sense call for you. If you want to trade something that's leveraged but not necessarily trade options, this may be a trade for you. But here, and it also follows a seasonality type trajectory. The black line here is the 40-year trajectory. And as you see, we're coming out of February into March. Oftentimes the gold, and gold's a little bit different than the miners, but the miners follow a similar path to gold. Into March tends to pull back a little bit into the end of March and then kind of move sideways. The longer term 40-year pattern is it pulls back all the way into the July timeframe, hits a low in July, and then catches a bid and starts running hard. What do we compare gold to? Well, if you take a look at the dollar had been strengthening a little bit, and so it is basically inversely proportioned to the dollar. So if the dollar's up, gold's going to be down, and vice versa. Well, the entities that I want us to take a look at here are basically JNUG, which is a junior miner. Over there. And it's a 3-time leveraged ETF, and this thanks to one of our members who said, suggested I take a look at this. He says it runs a third more than just the regular 3 times nugget, like the regular gold miners, or the leveraged ETF to the downside, which was DUST, D-U-S-T. And sure enough, last year I took a look at it, and this is what he traded last year. You'd get these little spike up runs, and as you can see, 57% in 9 days, 56% in 13 days, 62%. And I'm not saying we're going to be able to capture all of that, but if we can be prepared to capture even half of it and trade maybe 4 to 5 times during the year, that even for a small account, that'll help a person grow into a larger account, because $1,000 started, and if compounded 4 times across the year, would have wound up equaling 2811 by the end of the year, capturing 1/2 of the move only, 4 moves, a gain of 281%. When you're not trading JNUG, you can be looking at JDUST. What did it do? Now, it's the inverse. In other words, if gold is going up, JDUST is going down. If gold is going down, JDUST is going up. How did it do? Well, sure enough, 1, 2, multiple. And as you can see, there's multiple other opportunities here. I just picked, kind of 4 at random. And if a person would have collected, 1/2 of these 4 moves, they would have got, their account would have gone from 1,000 to 3,225. I'll let you do the math. If you would have traded both ways, what your potential gain could have been. But on just the inverse ETF, it's about 322%. Is that realistic to expect on a yearly basis? And I think for this entity, the answer to that question is yes. At the same time, am I going to put all of my capital into this particular trade? No. Okay, I am going to be conservative and say I will put a certain percentage of it in there, and I'll kind of measure that percentage off of, if I'm looking to grow capital, I'll be a little bit more aggressive. If I'm looking just to generate income, I'll be a little bit less aggressive and tune it back a little bit. Let's say I want to generate an average, a certain percent per quarter or a certain amount of dollars per quarter. I would let that be my guide. So that's what we're looking at with that. Let's see what else we got going here. Okay, seasonal expectations, correction or pullback, indecision. That's what I'm expecting at this time of year. That's typically what happens in the market somewhere between the March into mid-April timeframe. And then after, around tax time when people are starting to refund, just before the tax time, when people are starting to fund up their IRAs and their 401ks, we can start looking at some potential market bounces. Bonus trades, as I highlighted there, I'm going to be going into the individual charts on those momentarily. Strategy 1, 2, and 3 for the premium members. And those of you who have been following active trend trading, you know that 4 entry rules, 4 exit rules. You know those, and that's what I try to drive home almost every week. We isolate on those. Some of the other items I'm putting out a new composite watch list. We've been utilizing. If anybody's been utilizing that composite watch list, let me know. I just want to make sure that it's providing a benefit to folks. Okay, so I'm not there this week. I'm up in Boise, and guess what? We got snowed on yesterday, and it was wild. It was absolutely wild. Of course, you people who live in the mountains think I may be weird because I'm freaking out because of the snow, but I'm a beach guy, not a beach boy, a beach guy. So let's take a look at a couple of entities. Show taskbar. Okay, where to go? I'll look at this one here. Whoops, I don't want to look at that one there. Sorry about that. I want to look at this one. Here. Okay, as you can see, through the first, I'll put this on a 15-minute, so 30 minutes after, going into the second 15 minutes after the close, YY hasn't done much of anything, so we'll see what transpires. What can we potentially expect from YY? Well, let's blow this up a little bit. I'm going to have to move this down a little bit. And in the past, what was expected, and we'll just blow this up a little bit, what was normally at earnings, it's going to get some kind of move within, a short period of time. Right here, 2 earnings ago, it ran down within the 4 to 5 days after earnings, it ran down about $12. This particular time, after earnings, it ran up within the 4 to 5 days after earnings, ran up $25. And so the thing about it is whichever way it goes, we'll be able to capture that in the 4 to 5 days after earnings that it's open. So that's what we're looking for. And so with that, I want to go back over to right now, nothing. But we'll keep looking at that throughout the day. Let's look at there we go. Okay. Okay, first I want to look at JNUG. And I want to show you what it's kind of doing, which is kind of which doesn't make it real opportune to jump on board. However, it is hanging there fairly well. As you can see, it's coming off this low down here at about 12. It's been stuck at about 13, 13.50. We're just below the 8-day moving average. The 20-day moving average is here, and just coming out of the bottom of the Keltner channels here and the moving average envelope here. Well, the way I like to trade this is basically I can look at the daily. It had gotten down into the low part of the Keltner. That's where basically we've got really strong support. It may bounce again. Also, I could, look to take this off of, if it breaks above the high today, back above the 8-day moving average, that might be an opportunity to get in. If I get in there, where's my expected move? At least up to 16. So where would that, 16 be? That'd be about 19%. The other top side of that would be to the outside of the Keltner channel, which would be about 1640. If we switch over and look at the, keep that, but it's not going to let me. Nope. Nope. It's not going to let me. Okay, here we go. Here we go. Sorry about that. And I'm going to get out of the, take the extended hours off. I'm going to go back out here to about an hour time frame, half hour to an hour on the intraday. I'll get back out here to the hour time frame. And say, okay. And as you can see, okay, here's really something excellent that I wanted to show everybody is where is it opportune time to look at buying JNUG? Well, we can buy in the middle, but we would want to put a stop loss just immediate below this 13 because it could go down here to 12 and a half. And you got to remember on a 12 and a half, even if it's only 75 cents on a smaller price stock, if it drops down here 75 cents, okay, that's about an 8% loss or if more. So we could either reduce the market size or I wait. And what would I be waiting for? Again, I would be waiting for prices to get back down around the Keltner channel and or the moving average. My upside target up here about the moving average and or higher. But that's something that you could just work with. It gives a real sound capability of saying, okay, I'll wait for it to be down here. If it moves back up here, I would be looking at, what would I look at? If it got back up here, what would I be looking at? Well, maybe I would be looking to do on JDust. Oh, before I go to JDust, let's measure something. So from here to here is about 10%. Okay, that's the Keltner channel and the moving average envelope. Oops, there we go. Okay, now let's go to JDust. If JNUG gets up here, JDust would be down at the bottom, which is approximately more where we'd be looking at potentially buying. Well, if we bought down here, this is the area where I'd be interested in buying JDust. If I get down here about the $56 level. And on this one, $56 move from here up to here, again, about 8%, all the way back up to the top, though, we're looking at about 14%. So those are real quick swing. These are hourly charts here. If I translate that over to what I'm seeing here, and again, pull in the same Keltner channels here, moving average envelope here for the expected move. If we ran from 55 all the way back to a past high, we're looking at about 27%. So this is one of the reasons why I wanted folks to just be aware of what's going on with JDust and JNUG. How are we doing for time-wise? Okay, so, okay, well, basically that's what I wanted to show you for today. I wanted to just, I will be also watching a lot of the other entities. They're kind of like stuck in that middle zone, or stuck in the middle. I'm not really interested in trading them until they get to one of those extremes. And if that means waiting a couple of days, as it often does, then we'll wait a couple of days. And there's not a darn thing wrong with that. Let me go back over here. Hourly. Let's change this back again. Let's take one more look at our buddy YY. And let's throw on the extended hours. And YY still hasn't moved, so it's still in the process of doing its report. Sometimes these first moves, you see this big candle right here? Let me show it to you. This big candle, where was the high? 140. What was the low? Well, about 136, 130, just below 134. So those can kind of mark kind of sometimes the boundaries of where it might go. Isn't any guarantee, but that's what we're looking at. So, and then I'll be keeping everybody abreast of while we're playing, how we're trading that tomorrow morning. So, any quick? Let me go back through the questions. Phil, yeah, I mean, Phil, you can give me a call on my mobile if you would like after this, as long as it's a short call, since I am a guest in somebody else's house. Yeah, so strategy starts. Okay, doing well. Okay, Charlie, great. Awesome. Okay, with that, guys, we'll call it a day. I hope that that gave you enough food for thought, especially with respect to those bonus trades on JNUG and JDust. If you have, like I said, if you are time limited, where you cannot watch, watch a lot of different stocks, honing on those two can give you an opportunity to do well for your account and also learn the system and make it work for you. So with that, that's from my perspective, that's a pretty good deal. So with that, I'll bid you adieu. Have a great Monday, and we'll be, for the premium members, we'll talk to you on Wednesday evening. God bless everybody.